I wonder, Craig, people watch these levels so closely, but the all-time highs that we've hit, are they then going to be the benchmark by which you have to gauge whether or not the sell-off is now over and done with?
Absolutely, Dom. That's a perfect perspective from a technical vantage point. And when we start breaking out the new highs, it's just going to start to create a new leg higher. In fact, Dom, if you go back and you just look at sort of this upward trending channel you've been seeing for the S&P 500, moving to the upper end of that channel could very easily get you up north of 5,000 on the S&P 500. And Dom, I'd add one more thing in short term here. You were talking about sort of a rally into year end. If we look at the price action that we have seen on just the S&P 500 alone, over the past several weeks, we got to a pretty oversold condition. In fact, we had more than 20% of all the stocks in the S&P 500 trading below like a 30 RSI rating. And historically, when we've seen that in the past, the market has been higher 1.7% over the next month with a 62% positivity rate. So I think we are going to get a Santa Claus rally into year end. And I don't think it's going to stop there. And I think it's going to carry on into 2022.
What's the driving force behind it? For the better part of maybe a year and a half now, it has been that so-called reopening trade, the economically value-oriented, sensitive type trades. We're talking airlines, cruise line operators, that sort of thing, versus big cap, mega cap technology and communication services. So if there's going to be that kind of next leg higher, what do you anticipate will be it? Will it be Apple and Microsoft, or will it be companies like, Caterpillar or say American Airlines or Norwegian?
So, Dom, I look at charts all day long, but I got to back up and realize that earnings do drive stocks. And at the end of the day, what's really driving this is the upward trend in earnings revisions, not only for 2021 this year, but also for 2022. And then when you start drilling down further and saying, where is some of the best relative strength inside of this market? Going from where we are in 2021 to where we were in 2020, it was basically a 180-degree opposite. It was all about tech in 2020. And this year, it's all about energy. And I think as we move forward into 2022, I suspect your best relative performance in the market is going to come from the energy sector, financials, and I think you're going to see a rebound in tech, specifically the large cap tech, Dom. The Apples of the world, the NVIDIAs, the Microsofts. They're doing great. They're on the charts, and they're going to continue, I think, to trend higher in here. And don't forget about Alphabet. Despite some, near-term interruptions with some of their service, the trend on that stock has been fantastic. It doesn't look like it's ending anytime soon.
So you watch the charts, you pay attention to some of the fundamentals. I wonder from a macro perspective, how concerned are you, perhaps other experts out there, traders and investors in general, about ongoing monetary policy concerns? Is the Fed going to be the biggest variable right now? We heard Goldman Sachs CEO David Solomon say that it's going to be Fed concerns, monetary policy and fiscal concerns that kind of outweigh everything else in the market with regard to COVID.
So I think you're spot on correct with that. It's not really about COVID in here right now. And the sell-off that we had seen, a little 5% drawdown that we've seen, was really due to sort of a changing in expectations for the Fed in terms of their tapering. And I think what we have to put this market into an analogy is simply this. This is like an airplane about taking off. All of last year, coming out of the pandemic, was basically full throttle ahead with the fiscal policy, the monetary policy. But now that we've kind of gained altitude in here with the economy, we're going to be seeing those sort of engines backed off a little bit in here. And that doesn't mean that the plane is going to lose altitude. You're still going to gain altitude, and the economy is still going to grow. You may not have a 5+% GDP growth rate. Maybe you're a 3.8, but that's still pretty good. And the sort of correction we'd seen in this market, Dom, was really about sort of resetting expectations for some of those high multiple growth stocks out there. And I think going forward into 2022, I still think there's going to be a lot of opportunity for the tech names. And after this little valuation reset, again, I think we're going to start another leg higher. And there is so much negativity out there, Dom, at this point in time. And it's all about watching the Fed. And that negativity is just too high. And we're just continuing to climb that proverbial wall of worry.